did happen on NQ, right? So when I saw it, I knew it. And so I wanted to cover this for just a second, really quickly, right? So when we come down in here, right, I still don't know that we're going to get the rebound, right? And someone wrote to me yesterday and they said, well, you never know when it's going to reverse. But I would argue that when you get this angle down and then you get up above, you don't know that it's going to reverse, but now you have a very dedicated area where you can work, right? Starting from this point, you now know that it's very likely that we've gotten behind the most panicky of sellers. That you do know when this pattern appears, okay? You are correct. You do not know that we're not going to take another leg down, and I can find plenty of places where that breaks. But what that does for me now is once I knew, so I'm stacking time frames, right? I knew this was a critical area on NQ. I already knew that coming in, right? Now I have the area, and I need the price action. I got that right here. Big response, right? Now, so the first thing I did, because I was scaling up out of there because I'm trying to get my risk off, is I go, oh, we closed above. I want these 50, 60s back, right? So I'm scaling out because I'm down here and I'm covering my stops at this point. This scale right here pays for this stop on balance, however many contracts you're trading, right? I want to pay for this stop, which I've now moved within a tick or two of this low, right? But now that I see that we've closed above, right, now a new piece falls in place and I can start working this back because now I have, here I had a 20-point stop back here, right? But now I have a very controlled stop. If I get this to hold, and my risk reward is out of control because I know I have a very good chance from that location of getting back to this, right? And then Globex low, wherever that was. I think that was over here, right? And then this is just, if you get it, it's frosting on the cake. But I was pretty sure we could get this, right? And that's a lot of money. For me it is, right? That's a lot of money in this trade. It pays for stops. It lets me get extensions out of here. It puts a lot of P&L on the table for me, right? I don't even need this, quite frankly. This is what I want, right? So when someone goes, hey, I know what the market's going to do, to me, if you're taking a fundamental approach, maybe like Peter does, and he goes, this is what should happen because of X, and that's my theory, and this is how I'm structuring it. But even within that theory, because I've watched Peter trade, he goes, but this is what I need to see happen, right? I need to see X, Y, Z, right, happen to back up my theory of what I think is going to happen, right? And so all I had here at this point was a scalp. Now I have, but right here, the scalp turns into a trade, right? And now the trade, I know when I get this that I do not want to short anymore. This bar tells me even if we go lower, I do not want to have any more shorts on. We've stretched too far. We're out of energy. The angle of attack is too sharp, and it's a military running out of energy and has to pull back to resupply. And now what are we doing? We are going through the process of resupplying energy right now, right here. That's what it's doing. And we're either going to break and push out, or we're going to break and push down. But this is a build of energy, is what it is. And we exhausted both sides of the market with this move, right? So that's why when I get down into this, and I was pretty strong-headed because I have to protect myself against information that I'm receiving from y'all that may not be lining up with what I know to be pretty true in my own history of trading, right? So sometimes there's going to be two opinions. That's what makes up a market, and the opinions can be correct, right? But for everyone in the room, understand the way I make my living and I eat is through trading, not the room, right? This is how I put food on my table and pay for my homes and my cars and everything else, right? It's through this action, right? And this is what I love to do. I like the coaching. I get a lot of reward out of it, but this is my favorite thing to do, which is to catch them at major inflection points and rip them the other way. It's my favorite part of trading, right? So when you go, hey, I've looked at the chart. So I see some people go, I've looked at the chart and I know this is what's going to happen. I have a hard time choking that down, right? By the way, we're getting close to London close. And yesterday we opened up, by the way, at London close. This is 10:30. This is when the market opened up. So just be aware of that. We opened up after London close, right? So when you're looking at that, and so now to bring it back to the kid, the reason why it's important. The kid had no strategy, has no edge, right? he can't point to anything to consistently make some money. He knows that he makes a lot of money sometimes, and he knows he gets the crap blown out of him sometimes, but he has no idea why on either side. And then the last piece is he has no interest in learning, right? His driver, his primary driver, his personality type is making money. That's what he's driven by, because whatever that money represents for him, his trading is going to take him to the promised land. He will get out of his job, right? And he will have a better life. That's the promise of the money, right? Those guys, when the promise is the money, right? When the promise is the money, and that's what all you want, right? Then you have no way of getting to that promised land. You are almost certain to blow up, because your entire endeavor and your entire efforts, everything circulates around give me the information as quick as I can and pay me as quick as I can, right? And you're not saying, I'm not talking about me, I'm talking about from the market. You're like, look, their attitude is, I don't give a shit what you have to tell me, just show me the trade. Right? Where do I get in? Where do I get out? How do I make money? That's what most retail traders want. The way you evolve as a trader is you go, let me have an understanding of why this is going on, right? And when you see this, right, and why I became emphatic down here is I recognize this pattern. This is a gold mine right here. Even if all you got was a 50-50 and you can manage a 1-to-1 RR, which you can out of this pattern, you are going to kill it over time. You're going to make a boatload of money, because this pattern pays over and over and over again. It does stop on occasion, right? But it pays over and over and over again. And it doesn't show up all that often. It's the other problem, particularly in a low volatility environment, right? But to the trader who goes, I just didn't get it, right? They never go back and go, well, why did it do it there? And how could have I recognized it? And what are the steps, right? So all they have is a thesis. So my thesis is down 100, 80, 90, 100 points on NQ. I'm looking for reversals, right? I've been stopped on it, but very few times, right? And then, right? And then, okay, now I've got the 100. Now I've got location I'm willing to scalp on, right? And get my risk off as quickly as possible. Now I've gotten above my last group of sellers. Now my tune changes. I'm like, uh-oh. Don't be short. And then the last piece and the hardest piece for me was that is not only don't be short, find every living way possible to get long and be very hesitant to scale out, right? Scale as little as you can for as long as you can, which is an emotional challenge for me, right? I like to take it off the table. That's my personal challenge, is stretching those trades out, right? And then the next part is, for me in this process, is understanding that just because we had a big day here, is understanding that the next natural step is to have an inside day. That is natural. When we have this big wide range, I thought we would have a bigger range than this. I thought we would go from here to here, was my guess, right? That we would balance inside this area here, was my guess, right? So I didn't expect it to be quite this narrow, but I knew that I should be doing less today, right? And the reason why I know that, and why everyone who's a good trader from, you name it, everyone who's a good trader in these products knows this is the natural pattern, right? If you were looking for, huge continuation lower or huge continuation higher, we usually have to stop and build energy. Not every time, but all the time. So what my encouragement to you would be is, not only don't go just, hey, I want the white zone and I'm done. My encouragement would be what set that up? Why did that work? Why did, keep asking that why question, because that why question is what will set you up to get paid. We're coming up on London close, by the way, guys. Again, even if it looks like it's about to break, remember, we're now in established balance. We're going to have to get out of that balance, right? So push yourself from there and then ask the question, what does the setup look like for when I make a lot of money, right? And have a separate book detailing those setups, right? Specifically for those times, because what happens is as traders, we get so focused on each bar here that we forget, right? We're like, oh my gosh, it looks like it's going to zero. And we forget that all of a sudden the selling gets cut off. And I think I mentioned here, I said, I'm almost positive, I'd have to go back and listen to the recording, but I said, look, the PA changed, right? And then you see how small the down bars get all the way through here and how few. Look how many down bars we have. The quicker you can catch this change in pace, right? The the sooner you'll realize that the selling's been turned off and that we're most likely to squeeze back up, right? That's the whole, so you're putting together three components: the pace of the market, the overall structure from prior days, that's what all the white levels are in particular, right? And then you're looking at, hey, I actually need to get behind the biggest seller. So I picture it, for me, what works best is once I get behind these guys, I picture it like a running back that once he gets behind the line of scrimmage, right, he's got a lot of open field to run, and all he's really got is safeties to back him up on this end, and it's possible for him to break it up field for a touchdown. That's just familiar with football. It's my sport, I like watching it, so that's how I view it, right? But I know until we get above this defense, which are the sellers, right, we got to go. Just like I know here, right, in order to break lower now, I know yesterday we stayed in this little chop area, right? In order to break down, I've got to get underneath this group. I've got to get underneath this whole structure right here. That's what opens me up. And conveniently enough, right, where does that structure end? And where do we have to get behind? That means we have to get behind the 62 retrace from yesterday's draw. We haven't even tested the 50 retrace. But we have to get behind the 62 retrace because that's what will be the sign that buyers have lost control. This group has lost control, and now sellers can take back, and potentially another long liquidation can take place. And now I'm back to looking to this pattern, right? And I want to show you all something on that pattern really quick. Since absolutely nothing's going on and I'm not going to trade chop. Okay, get me to a 5-minute bar. Let's go 15 minutes, easier to see, right? And let's go back to format, symbol. So I like to go back to the most volatile markets and the worst market, right? Because I want to show you where it fails. Here we'll go to January 2009. I should get us just past Armageddon. Is this helping anyone, or am I talking to myself, or is this helpful? Not helpful? Okay, so here's Armageddon, right? Just so everyone can see. Okay, let's find it. Where's August? There it is. Okay, see how big the swings are here? 1940, 1820, 1880. We're moving through here, right? See that? So first look at the down day. Look at the quality of the down days, right? Notice how many down days. This is 2008, right? Pretty hairy period of time. Look how many times all of us know that's been in the room for a while, right? We're turning up. We do get some trend days up. But notice even on trend days down, but even notice on the trend days, they push down, push right back up. Trend day down, push down, right, they push down, push back up, push down, push back up. That's the normal course of action. Okay, I got it. Hey, apparently gold is moving, guys. Hold on a sec. Wow, gold looking ugly. Wow. What happened on gold, Peter? Anything? Any news? Yep, that's a huge bar down. That's a long liquidation, my friends. Wow. Look at that. Dun, dun, dun. Suck 'em in, suck 'em in, suck 'em in. Wham. Anyways, let's get rid of this and go back. Okay, so what did the reversals look like in here, right? So can I find that same pattern, right? Because this is Armageddon. Notice I can't get above my 15-minute bars. I can't get above my sellers. Here's my last seller on a 15-minute. See how, so in this case I got above the body, right? So notice it goes in stages. So notice it goes in stages, right? This is just picking up, I don't remember this, although I was trading it, right? So remember, when you think it's going to Armageddon, right? Remember, nasty reversals. This is generally unsustainable, these bars, right? I'm looking for ways to get long, right? I don't always get it, but I'm looking for ways to do that. So push down, push down, push down. Can't get above any of the bars. See that? Oh, I get above the body at least here. And now I've gotten clearly above my last seller right here. And then the last piece is I want to get above this seller. But this is a good start, right? It's the first time I've closed above the body of any 15-minute candle, right? So now I'm coming in. I'm going, oh, look at that. We're down from 1920 down to 1880. 40-point rotation. Check. I'll get back to you in a second. $50.60 back, whammo. This is a move from 1885 to 1900. It's 15 points, right? 20 points almost from there. My guess is that's a 20-point move right there. Like, we had to beg to get that all day. We were getting it in one afternoon, right? So what did you have to do? Wait till we get above the last seller. So if you look on this day, right? Wham. We go all down, 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 down. Now, I want you to notice something. We get finally get above the last seller. I may not get the 50 retrace to get my entry, right? These are 15-minute bars, so I don't know if it wicked back down at any point. But I know once this bar closed, I do not want to be short anymore. See how the V shape, right? See how that V shape happens repeatedly? And that's why I wasn't shocked by yesterday afternoon, right? Excuse me. And that same precept works when we're rolling up, right? See how I want to get underneath my last buyer. So see how once I got underneath my last buyer on this bar, I can now draw up my 50-60, right? He comes back up to my 50-60, and now I get the move down. And that move down, by the way, was back into my 50-60, 50-60 to 50-60s, normal structure, right? And so I can go through this market, right? I can go through all of these markets on the downside moves, right? So I get a flush, right? I get above my last seller right here, right? I get above my last seller right here. And even if I cannot get the long, I know immediately I do not want to be short anymore. This pattern played out all the way through, right? So if you look here, right? Down, down. Notice I cannot get above my last seller, right? Cannot get above my last seller, right? I get above my last seller in a solid bar. See that? Here's my last seller. This is my first step, right? But really what I want is this bar. This is my early warning system right here. And this is a retest of the low, by the way. That's a heavy push that could not break that low. That's one of the patterns I'm looking for, right? Now I get above my last seller. What am I going to do? Same thing I did yesterday, right? So I've been through this. I know how it works most of the time. Right? And you think, oh, look how far it's moved. Dun, dun. 50-60 back. It's a little bit. The 50 is actually a little bit higher. And now I get a move from 1840 all the way up almost to 1855, right? And I didn't have to figure any of this out all the way down. I could have just laid back, right? Same thing here, right? I'm waiting. So notice here. Here's my last seller. Can't get above them. Can't get above them. I got above my last seller. This is a place where it would have failed. Actually, not even could have. Would have, except one thing. And why you have to take off the risk as you're going. Okay, so see this bar? So that's the bar that got me above my last seller. See how we didn't make it? We whipped back, but we didn't make it back to the 50-60. If I have it drawn right, it's big bars. So, but we didn't make it back to the 50-60. Understand my entry. Right? My entry is going to be between here and here, and my stop is going to be about 1 point behind there. So sometimes it's going to fail, right? That's 1884 to 1878 is my approximate stop. When I didn't get filled here, and I would have wanted a new high before I tried the 50-60 again, but that's getting way too much detail. What I want to show is that it can fail, right? Also, the other challenge there was by the time I got my 50-60, we were already back into the other 50-60. See this? We went into that was the difference between yesterday. We extended so far down, like down here. see how far when we get over here and we're down at the low down here, see how the 50-60 is way up here over here, right? So when I get down to the low, when I get down to this low, and I can look up here and I can go, oh, now I have some room to run back to this 50-60, right? So now what do I want to do? I've got to get above my last seller. Now, does it get tricky? Okay, and why I'm always going back and got it. Okay, so Peter's saying the 50-day simple moving average on the US dollar turned up. If it crosses the 200, the SMA would be a buy signal. That makes sense. All the swing traders will be taking that. That may be why gold is lower, subject to US dollar holding above the 200-day simple moving average. Just my thoughts. Thank you, Peter. So I want to show you this. When I get cautious about the turn not coming prior to the last hour, see this right here? Okay. And okay, so the turn doesn't come prior to the last hour, and I've warned about, hey, if we don't start turning prior to the last hour, if we haven't already begun that process with getting above the last seller, it is a very dangerous time in the market. Okay, so obviously there's times where we've gotten to the last hour and it has turned, right? The problem is I've had more than my share of these whooshes in the last hour, and they suck, which is why I'm generally disinclined to take the trade in the last hour. Even though sometimes it works, my odds drop significantly that it will work, right? So if we look through here, right, and we're going through that same process all the way through again and again, right? And again, in ES and NQ, it works better on the long side than it does in the short side, because the long side's the short side's the weaker side. Even though it's faster, it's the weaker side in this market, right? So as you look when we're going through, and I'm hunting through, what I'm looking for when I go back here is where does it fail, right? So notice all the way through here, I can't get above my last seller. I'm above my last seller. I want to show you this, right? Here. Right? I can't hammer this enough. I'm above my last seller. I want long out of this area, right? I'm stretched. Prior day's close was 1915. We're down to 1880, right? 35 points. Pretty good stretch. Intraday, we're from 19, let's call it 03, down to 1880. Again, 23 points. Remember, this is 2008. Banks are falling apart. Armageddon is coming through, right? If you ever had a driver to push the market to zero, this is it, right? This wasn't some kind of ethereal concept of, oh, the Fed's raising too much, or, you know, interest rates are too high, or fundamentals in the companies. This was like, hey, we're going broke, right? People thought GE was going to zero at this point. And you should remember that when you're trying to get short, because even in that environment where you had maybe the best downside driver I can ever remember in my mind in my trading career, right? The best downside driver, and you could not get the market to go in a straight line down, right? So when it stretches past 20, every time you see me in the market and you think we're going to have a down 50-day, I'm still going to be trying to buy down 20, 30, 40, 50. I'm looking for a way to get that pattern. So here's the getting above the last seller, right? There's my swing high. There's my 50-60 back. This is why you must try to scale some of your risk off, because occasionally it comes all the way back. Now notice this close right here. See how we try to push below the low here? This is a delta push. They tried to get below the low and were unable to close below that low. See that? They tried. There's the body, the lowest body close. See how we tried to break that and they couldn't? I almost guarantee you I was long the close of this bar, and with a stop right here, right? 1881 to 1879 in exchange for a push to 1907. Yeah, I'll take that all day long. But it actually didn't push to 1907 that day, 1898, and I'll still take it all day long. 20 points a push. So for guys that are newer traders, last 3 years, if you have not seen ES go 20 or 30 points in 20 minutes, it is possible. It is not unusual. You have to be very cautious once we establish these lows of being willing to taking the short side trade, because these face rippers are normal, right? And if you look, right, because the market went lower, all that happened through this entire area, right? See how we consolidated? Institutions and individuals got too short here, right? See the rate of decline? Everyone was pushing too hard out of a big stretch, right? All we did was come back for a breather. There's your 50-60 back. We relieved the pressure off of this area, come back to test, do one more 50-60 back. Again, this was a very weak market, so you'll see that the 50s and 60s, right? Even in a bear market, that 50-60 still in play, right? And now we get down. We've got a weak low tested 1, 2, 3, 4 times. Fifth try is the charm. Down we break, and then we started that whole process over. And that's how it was all the way through here. Again, above the last seller, right? I'm looking for the first 50-60 back over here. Patiently. I'm structuring my stop appropriately here, which, by the way, this is a big stop. This is almost 8 points worth of stop, right? I'm going to have to cut trade size to make this work. I'm looking for a first test in 50-60 for my reward to the upside. And this happens over and over and over again. And you'll notice that the failure rate on that setup is much higher on the short side than it is on the long side. The reason why everyone likes shorts is because of this. The reason why I like longs is because of this structure. Due to the natural nature of the market and being a machine that pumps money into it, we consistently, even in the worst of markets, get U-turns. And if you don't have that nailed through your head, right, you can nail all. There's some guys that are very very skilled, right? But even with these rips down, I would prefer to find a long. And if you'll notice that if you use that filter of I need to get above my last seller, right? I need to get above my last seller. You did not get smoked anywhere down on here, which I want to bring back one more time. If you go, I should have been short, I should have been short, I should have been short, you will forever force yourself to try to catch these moves when all you had to do is go, hey, there's my push down, there's my sellers. Once I get above my sellers, break a VIB high, 50-60 back, and you get your pushes. And you will get plenty of opportunities. You get above your last seller, right? And then it's your job. If you look at that 15-minute bar, see how we get clearly where the body of sellers were. I'd have been pretty aggressive on this, right? And if you look from that bar, this low to this bar, you get a wick back into the 50-60, stop right below. Now, granted, you had no idea at this point that we weren't going to break that low, and there's no additional technical analysis. I'm not going to go back and look where support was. It would take me too long to figure it out. But I have a 1854 to, let's call it 1850 stop, okay? 4 points in exchange for a move from 1854 to what was ultimately a move to 1890. Took all day to get it, right? But if you'll notice, once we got above, we never got below my last seller till right here. Even if I exited right here, this is still a move from 1854, if I exit here, to 1876, 20 points. And the reason why I encourage people to go back and look at this period of time is 2 reasons. First of all, people don't believe me when I go, hey, we can run 30 and 40 points. Look at this move. This is a move from 1810 to 1870, 60 points in a straight line. And what saved your bacon? We never got below the last seller, and the last buyer. And if you wait to get below the last buyer, you at least have a fighting chance of getting the reversal, right? And if you wait to get above the last seller, right? Once you get above that last seller, right here, you know, hey, I'm on pause until I see the guys. I'm not doing the 50-60 or anything else. And that saved my bacon in this market. It saved my bacon. There was occasionally misexecutions, but for the most part, when I was in here, I would wait for this bar to form, and then I was just drawing up my 50-60, and I was praying it would give me that 50-60. And once I locked and loaded this, I was buying SPY calls out of the money because it was such a wide range, right? And I was praying. I would gladly take the stop because I would hit that 50-60, put my stop below, get up and walk out of the room because I knew I had huge odds of having 20 points on the table there. And that's how I made such a killing in 2008, and that and buying puts on all the banking stocks, on the mortgage insurers in particular, right? And so that is how you do that when you're in a vicious, ripping downside market. Wait till you get above your last seller, you get above, and now you can start working for the push to the upside. Once you get above that last guy, it does fail occasionally, but not very often. And at the very least, you know turn off your short machines. Everyone will want to get cute and try to catch this little rip right here. My suggestion is you turn off your short machines after you get above your last seller, because you are likely to rip. You likely have people trapped and overcommitted. So I should have recorded that, but I didn't. Oh wait, I guess I do have it recorded at 2:48. I can just go back and edit it out. So that's my 2 cents. I suggest you go do the homework for yourself. It's a nuance. Most rookie traders aren't looking for that nuance, and they're trying to get very technical with their volume profiles if they're that advanced, or they're looking at their indicators. I don't need an indicator to tell me when we've sold out. I know exactly what that looks like. We get above the last seller. I don't give a damn what my indicator says. And on most days when we have pure trend down days, we never get above it, right? And so if you'll just wait it out, drop your 50-60. Peter, this is for you, brother. You get that 50-60 after that stretch. That's where I was locking and loading the calls out of the money. I was buying probably 0.3 deltas, like I was paying nothing for them, because I knew by the following day I had a damn good chance of being 30 or 40 points up, right? And they were just massive 5 and 10 baggers on those calls. And we don't have that now. And the reason why I went through this is because if you're a newer trader, i.e. the last 3 years, right, you haven't seen a market where not only do we rip both ways, but where you get these massive, visceral, rip your face off and throw it in the garbage can moves, right? And you thought all along, right, what every rookie trader's thinking is this: oh, we pushed to the downside, 50-60 back, continuation lower, it's all poorly auctioned below, all we did was fill the top of the gap. We haven't even filled the gap here. See yesterday? Just like yesterday, everybody and their brother was waiting for that. Yesterday, V-shaped move, consolidation, rip your face off move to the upside, and everyone who kept shorting this all the way up, right? Because remember, it's 2008. Banks look shaky here, right? And this is in April, right? You can see this is April. It's only going to get worse in August. But I remember reading clear stories, right, of people saying the market's going to roll, it's going to be a bear move. That doesn't happen until August, right? Look at all the up. Look at all the up you get prior to August. Here comes August. I'm going to show you. First big crack in the market right here. This is May, but we're still not there yet, right? Here it comes. There's where it starts. That's the gap down, trend day down. Notice we have a very hard time getting above the last seller. We just peek our head above. This is where there would have been a stop, by the way. That would have been a stop, except I would have been stopped on that trade. Okay. And now it starts to get ugly. See that? But we're not done yet, because there's whenever anyone tells you, yeah, I was short in August of 2016, that may be true. But watch the heat they take before we get the big move. 6, here it comes. We should have one more rip up before we break. Okay, so when someone tells you they stayed short, remember, they're talking about staying short from 1650 to 1750, 100-point ES moves, right? And I don't know anyone except hedge funds that do that, right? Unleveraged. Okay, and I don't know any retail traders to say, yeah, I stayed short for a 100-point ES move. I don't know anybody who does that. I've never met anyone who does it. Again, yeah, I stayed short. I call bullshit when you get this. But here it comes. This should be August, and it should get ugly. Oh, not yet. One more rally. Where does crushing come? It's in here somewhere. There we go. And then finally comes the bone crushing, right? And then once this bone crushing is over, right? See how we finally get the move? Look how quick the rebound comes and how ugly that is on the upside. And once we get that low in, right? So there's some ugly moves in there, right? Again, getting above the last seller. There are some stops. So notice this. Let's look at this day, right? If we've been trading that seller where we want to get above the last seller, stop at the low, right? See how we can't make any advance? And then we cleaned everyone out because everyone's stop is sitting right here. How do I know that? Everyone's stop is sitting right there because we backside tested to the tick and then continue lower, right? And notice how we never get back above again until the last hour. And this is why I'm very hesitant, this whipsaw, to initiate that position in the last hour, right? Notice the next day we get above the last seller and off we go. So that's what the low looks like, right? Then I want you to watch the turn in here. Okay, you'll see it. Where's the turn? There we go. And then all of a sudden, see, all of a sudden we get these narrow ranges, right? Watch wide ranges, then boom, overnight, magically. Narrow ranges, day after day, right? Little push down, little push down. What you're going to watch, oh, maybe I'm early here still. Somewhere in here, right towards the end of the year, we magically turn and we never go back down. It just starts, see how the ranges are getting smaller and smaller, right? And there's less and less fear. See how tight those ranges are getting, right? And the clue there is getting above your last seller every time. Doesn't matter where the range goes, right? That's your clue. And then we eventually, obviously, that was the beginning. That was January. That was the beginning of the most massive rally and face riff where everyone said the Fed couldn't do it, and they did, right? So, at any rate, long story short, I hope that helps. I am against being bearish in the hole. That's all I can say. If I have one principle to live by, do not short when the market is down. If you do not short it up high, do not short it down low. You will live to be bankrupt for it. That's my 2 cents. Any questions? And the reality is, for most new traders, until you've experienced getting your face ripped off, you won't believe it, right? You'll think like, oh, no, I can read it, and I got it, and this volume build, and this low volume node, and this, that, and the other. And I'm like, yeah, that whole entire profile, you can take it and throw it in the trash. Once you've gotten above that last seller, they are going to rip everyone's face off most of the time. When I say most of the time, let's just call it 70% of the time. 30% of the time you'll be right. 70% of the time you'll be wondering where all your money went if you're trying to short against that after that's occurred, right? The problem is psychologically, I've never thought that out. Haven't thought it out that far, Randy. And the reason why is the more complicated I make it, like will it hold this time? Remember, and you can go count for yourself, right? Out of every 10 instances that you see it get above the last seller, 7 to 8 of them are going to rip your face off to the upside, right? So the first part of my education of learning that was stop shorting when we get above that last seller. Just take short and frickin', if it's a button, rip it off your keyboard, right? Because you will be sorry. And I have never failed to see some guy who tells me, but I got 3 points on the downside. I was like, beautiful, you missed 30 on the upside. Take that short bar, rip it off your keyboard once you get above the last seller. 30% of the time you're going to go, ah, they took it lower. And 70% of the time you're going to be like yesterday where you're going to go, thank God I was not short anywhere through there because it's just so painful, right? And so the first step in that, coming to belief, right? So you hear religious people talk about all the time, you got to come to believe, right? So the first part of that was I had to throw away all knowledge of charts. I had to throw away all knowledge of charts to believe that, right? Because I was still staring at my chart, right? I had this chart right in front of me, and I was staring at it, and I was going, oh, there's a low volume node here, and high volume node here, and this should provide resistance. When all I needed to know was we've trapped all the shorts and get the hell out of the way, right? Then the next part I had to believe is that, hey, I can actually buy that and survive, right? I have to reduce size, which was another internal conflict because I like trading with lots of contracts. And at that time, it was as many contracts as I could humanly buy, right? I was pretty much just calculating what my risk of a 20 or 30% drawdown was. And then which put me on edge, but that's what I was willing to take in that situation, right? Not anymore, but then I was. And then the last piece was I knew when I had it to get up and walk away from my computer because I was going to sell it. I was going to find a reason to get out of that trade, which is what led me to buying out of the money calls because I could actually sell my futures. And I knew that in that environment that we could get a 20 or 30 point bounce out of there, right? And I knew that I knew in that process there was going to be 5 and 6 point counter rotations. There might even be 10 point counter rotations, but not to sell it, right? So that's applicable in small markets and in big markets. That's why. So that brings me up to February, March, April, May, where I struggled so enormously, right? My entire business has been built on those kind of ranges, right? So when we get down to, hey, the range is 6 points and I see people celebrating 2 point moves, I'm like, shit, that's nothing, right? I mean, like, I'm putting on enormous risk for 2 points when I'm used to putting on big risk for 20 and 30 points in ES, which is why most of my trading is switched to NQ, because I can still get that 20 and 30 point rip. But even then, it's not those rips on NQ. By the way, for everyone who's gotten really comfortable trading NQ, you should go look at NQ in this period, because these bars, these rotations, were 200 and 250 points on NQ, and an average bar of 30 points would not be unusual. 30-point range in a 5-minute bar would be normal on days during this period, which is why everyone was trading ES instead of NQ, and Russell was unmanageable. Russell was illiquid and had intraday gaps during this period. It was impossible to manage the risk. You would actually just get your face ripped off on your stops. I'm talking about 2 and 3 point gaps on your stops before they started filling you on your stop losses, which is why I stopped trading Russell after this period of time, because I had no risk control. Therefore, I could not use any leverage, right? It was great when you got it right, and it sucked awfully when you got it wrong. So you got to be willing to switch hats as you're switching back and forth, and also have a knowledge and understanding that markets change over time. And what you'll notice, mostly what you had in this period, which didn't make yesterday so unusual, is it is not unusual to consolidate, have a big break, look like it's going to zero, and have it snap right back to the point of control in this area, have it come right back up and test. And you'll see that pattern if you look closely. You'll look at where the biggest point of control was. We push away, 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 away. They think, oh, they got it. Snap. Even on a day like this where you'd think, hey, sellers have it. There's no way it's not going lower. And all you're doing is building up shorts at the bottom of this. And I wouldn't have caught this. It was too late for me to catch it. There's no way I would have caught it. And as a matter of fact, I might have suffered a stop right there. Although I would have bailed when we got to 1 o'clock, so probably not. I probably flatted it. But what you'll see is constantly we break away from a base, and you think, oh, surely it's going to zero this time. Right back to test the point of control again and again and again. Didn't matter how far the stretch was. If they left a point of control up there untested, right? And this is what I'm concerned with in the last hour, which is why I would have bailed. This was, if they could keep the consolidation to the last hour, they had a chance of long liquidating it at the end of the day, right? And that would have been my concern. So again, even here, best case scenario, see, I've already gotten above the sellers, but see when that 50, I told you I'm pretty concerned about 50-60s once we get to 1 o'clock, right? So there's the 50-60. Even if I had taken it, I would have survived this because my stop would have been back here, but I'm pretty nervous when my first 50-60 comes after 1 o'clock Central Time. It makes me all nervous. So anyways, that's it, guys. Since there's nothing going on and there's no reason for